Hello, everybody, and thank you for joining me today. It's Alan Barry Labakan with the Rocks and Stocks News Show. I've got my weekend show for you today where I'm going to look at some really exciting things. I think that gold is a coiled spring that's just ready to go breaking into new all-time highs, and I think it'll exceed 4,000 before the end of this year, and much higher in 2026. And there is a long-term catalyst and short-term catalyst. So I'm going to start the show talking about some metals. Then I'm going to move into a case study comparison between Tesla's valuation and free cash flow and Agnico Eagles. And Agnico Eagle is also a reason why I make the case that you're better off owning a high quality gold miner than gold itself. Okay. And then I'm going to go into a case study on how I value companies. And then I'm going to look at my picks and talk about them as well in the context of their charts. Okay, so I'll be doing a lot of chart analysis today. So let's start out with gold. This is FinViz Elite. I'm a paid member there. They do a great job. I spend a good amount of my time on looking at this chart. And right off the hop, one of the things you see is it going from the bottom left to the top right. Along that way, it's had basing periods here, and then a big run here, and then a big run here, and then a big run. So it goes through these basing periods, rallies, basing period, rally, basing period, rally, basing period, and now I think it's ready for another rally, like it did on Friday, and I'll talk about that as well. But before I get into that, another really important dynamic of this chart is that all of these runs are to new record highs. Okay. So it's been making a series of record highs since it really broke out, had an important breakout in early March of 2024. All right. So that's the context. That's the chart. Now talk about what is fueling that. And what is fueling that is the what I describe as the death spiral of debt, and that's getting worse and will continue to get worse due to the uh, out of control cost of servicing the debt. And ultimately, I think what we're seeing is that the fiat currency system and the debt system are broken. And so it's my thesis and others that gold is the perfect hedge against the broken debt and deficit system. But the what I think is going to be a major contributor to the next breakout and also add fuel to the fire of those longer term trends that I think are going to ultimately lead to the world going back to a gold standard. And in 2024, I wrote about why I think gold is going to see 20,000 within 10 years. And I wrote that in 2024. Um, and so what's happening now that is going to have a major impact in the price of gold and silver for that matter is stagflation. I've been writing about stagflation for a good year and a half or so, year at least. And what I've been saying is that the government statistics on economic growth are overstated, that the jobs market is overstated, and that inflation is understated. And this has been going on for a long time, that the jobs market has been in trouble. And on Friday, we saw that the jobs market has stalled. They were predicting 135,000 jobs. I think it came in at about one-tenth of that. And that's the initial number. They always get revised downward. For example, in May and June, those were, and that might have been the most troubling part of the Friday report was how significantly they were revised down. And so it's clear that over the last 3 months, the jobs market is hitting a wall and it's plummeting. Okay. And ultimately, where the jobs market goes, so goes the economy. And the economy is on shaky ground as well. Now, some people will say that the household surveys are left leaning, but I'll use the what is not left leaning, which is the CEOs of public companies are having troubles giving guidance, forward guidance, because of the economic uncertainty. What is causing that economic uncertainty is the tariff tantrum. And this is also starting to rear its ugly head in the jobs market. When corporations are uncertain of the future, they tend to hire less, they tend to lay off more, and they tend to pull back on their capital spending. So they're not building factories, they're not building warehouses, they're not building new stores. Their uncertainty is causing them to sort of put the brakes on everything. And we're seeing that in the jobs market, and I don't think it's going to be very long before we start to see in the real economy show that the economy is slowing towards a recession. Will it get there? I don't know. I mean, I think that the Federal Reserve, although it doesn't want to help Trump, it won't throw the stock market under the bus, and therefore they'll get back into the QE business, and they'll get back into slashing rates to try to stimulate. Um, and which that argument in itself says that the economy is not, if you need to slash rates, and in order to slash rates, you have to get in the Fed has to get back into the quantitative easing business and get back into manipulating the yield curve on the bond market. Well, that's QE, and that happens because there's economic problems, not because everything is as rosy as the overstated economic numbers are trying to portray. And so another alarming event, I have no sympathy or I'm no fan of the BLS, the Bureau of Labor Statistics, because I think they've been overstating the numbers. But now the numbers are getting so bad that even the overstatement of those are very troubling. And Trump, in true Trumpian fashion, he fired the leader of the Bureau of Labor Statistics. Now, I'm not arguing that she should that person should not be fired, but when you do fire somebody, it sends a message to Wall Street and investors that look, he fired her on the day that the numbers uh, are not to his liking. And that's the troublesome part of it, is that, if they kept on putting out those overstated numbers and making everything look rosy, well, then she would probably still have her job. But are coming clean and on how much they've overstated things in May and June, and uh, and um, uh, and July was just horrible. So You know, the labor market jobs are hit a wall, and they're plummeting, and they're stalling. So if they're stalling, the economy is going to stall as well. And so what this tells you is that the jobs and economy side of stagflation is getting troublesome, really troublesome, where it could go towards no growth or even a recession. And so, let's say it's 0.5% of growth or less. That's problematic. But the other thing that the Trumpian crowd have been able to, and Biden before him, was the understatement of the inflation. Now, it has been much stronger in real terms. After you stop excluding all the things that they do exclude in order to make a case that inflation is not problematic, um, is that what is going to make it even worse is the tariffs. But until now, they've been able to uh, say that, oh, there's no inflation, the inflation is fine, no problema. It's everything is copacetic. And it's not, because the reason they've been able to do that is when Trump got in January, officially into the office, he made it clear that he's going to put tariffs. What exactly they'll be, we don't know, because that is changing all the time as well. It does look like around 15%-ish could be the situation for many countries and maybe worse for others. So the idea that that's going to be paid by foreigners is ludicrous. It gets paid when the product hits the United States. So the company that's getting that sent to them has to pay, and they're ultimately not going to eat that. They're going to pass that along to consumers, and the consumers are already stretched. But the reason that it hasn't happened as of yet is because when Trump got in, a lot of companies front run. They tried to get ahead of the tariffs, so they built up their inventories. All right. And so they're using pre tariffs uh, pricing to that they've been able to do, and that will end soon, because now there are the tariffs are starting to get impacted, or are fully put out there. And so as they restock their inventory, they're going to have to pay the full price of the tariffs. And so this will I always said that I didn't think that it would come in waves, the tariffs. Okay. Some companies will fight tooth and nail not to raise prices. But at the end of the day, they're not going to lose money to make Trump happy. That's totally unrealistic. They're not going to put their companies in jeopardy in order to make Trump happy. The MAGA crowd and the Trumpians, the Besants of the world, and others like Lutnick, they'll make that case while they can, but pretty soon they're not going to be able to make that case anymore, and inflation is going to kick in, more troubling inflation. And it's already starting to happen. Even using that foolish statistic that the likes to use, which is the PCA deflator, that is not going to work, because even it's already starting to move up, and it does not accurately portray real inflation, because it excludes so many things that every consumer has to deal with on a daily basis. So the favored statistic is getting worse, and the real inflation is getting worse, and it's going to get even worse, more troublesome. And so what this tells you is that inflation is going to get stronger. So if you've got growth dropping to a 0.5% or 1% or lower, and maybe even dipping into recession, and you've got inflation at 3%, 2.5 to 3.5 or 4%. Now you've got real serious stagflation. And once that is factored into more people's thinking, that is very bullish for gold. It's also very bullish for silver. And that's what I think people are going to start to realize is that this bout of stagflation could be every bit as troubling as the last bout in the 1970s, which was extremely bullish for gold and silver. So these are the reasons that I think gold has the long-term indicators as well as the short-term stagflation that's about to rear its ugly head in a way that everybody has to pay attention to and adjust their portfolios for. And gold and silver in that environment is going to do exceptionally well. It's already been doing exceptionally well based on the long-term trends, but now the short-term trend of stagflation becoming like a household term, if you will, all over Wall Street, all over Main Street, and all over Main Street worldwide. This is going to be very bullish for gold and for silver. Okay, so let's switch over to silver. Now, silver has been, it had a very important breakout above $35 per ounce. You have to go back to the 2012 to see it at $35 an ounce. And although silver has popped above to $50 two times in history, the reality is that it has spent a very little time above $35, even during those bull markets in the late 1970s and in the 2001 to 2011 metals bull market. It spent very little time, like less than a year in total, in a history of silver above $35 an ounce. And so when it made this important breakout above $35 an ounce here, this was a bell that everybody should be paying attention to. And it got all the way up to $40 on the intraday in the futures market. There's been some profit taking of late, but this does not concern me at all. In fact, I'm very happy to see the pullback stopping right at the 50-day moving average. And so I think we're going to see a very bullish market for silver throughout the remainder of this year. That will get it well above $40 per ounce and take a run at the all-time high of, let's say, $50 per ounce. After that, I think it makes a series of record highs after record highs because, again, what I just talked about in the gold space. But I also see impressive moves in platinum. Look at how it's broken out and recently just came back to the 50-day moving average. This is a very bullish trend. No matter what trend, whatever company or metal you're looking at, this is an extremely impressive trend, even on the pullback. And I would add that I pay a lot of attention to pullbacks. I love to see rising higher lows. Everybody pays attention to the higher highs. I pay as much attention to the higher lows. And when that low happens right on the 50-day moving average, that's a very bullish indicator. Palladium. Uh, I think this is one of the best cup and handle formations that you can find out there. And it's kind of indicative of something that I look for in a cup and handle, especially for the post uh, right side of the cup. Okay. So here you see let's say the closing high was $1,228. It then went down into the cup for the bottom of the cup formation, and then it's been riding up the right side of the cup. Now, here's something very important that I watch for is how much it exceeds the left side, the peak of the left side of the cup. Okay. If it is well above that, like it did here, it went from, let's say, 1230 to 1350-ish, a little bit under that. That's a significant outperform or a significantly higher than that peak back there. All right. So when I see this happen, usually that handle is very short term, and then it gets back into the groove, and they start moving up again. Now, if it's kind of equal, if the right side tops out where the last peak was, then the candle can last longer before it rallies again. And so on this profit taking, we're seeing that it's staying well above the 50-day moving average. And so I'm predicting that palladium is only going to have a short-term handle and then onwards and upwards from there. Now, copper, my Dr. Copper was having a phenomenal run since early April from 40, let's say $4 a pound. It went all the way up to $6 a pound, which is phenomenal. Okay, for a commodity like copper, that to move up that much, 50% in a matter of what, 4 months is phenomenal. Now you're normally going to see some profit taking after that happens, okay? But it got pummeled. So the reason for this big move was when Trump, and by the way, that is to new record series of new record highs. Um, it was because Trump talked about putting a 50% tariff on copper coming into America. So there was a lot of front running of that tariff. And then on last week, they announced, oh, taco time. Trump always chickens out. We're going to not do the 50% tariff on certain ways that copper comes into the country. Okay. So he quickly forgot about the idea that tariffs are going to cause more mining to happen in the United States. I think some of the copper miners probably got a hold of him and said, by the way, it takes us about 5 to 10 years to bring a new production online. So yeah, it ain't going to happen in your term. And so he pulled the plug, did the taco thing, and copper got hammered. Now, this is just ridiculously oversold. All right. This is primed to make a substantial run back upwards on the bounce. And I don't think it's going to be a dead cat bounce, because what got it to go from the lower left of the chart here to the upper right here is the fundamentals of what's happening in the copper business. There is just not enough copper mining happening. A lot of those mines are old. They're running towards the end of their mine life. There needs to be more new mines come into production. The pipeline of projects and development is bare. The cupboard is bare, if you will. And if you look at the exploration, the discoveries have fallen off a map over the, or fallen off a cliff over the last 2.5 decades. And and so the pipeline is the explorers that find important discoveries and the developers. And there's not enough of those. That cupboard is bare. And so therefore, as we see all this new demand coming from electric vehicles, power grids in developed and in developing economies, your normal use from the growth in technology, from cloud computing and the internet, and cryptocurrencies use a lot of energy. This all needs a lot of copper. Now you throw into the mix artificial intelligence, and in the not too distant future, robots. And so even if the economy goes into a pullback and even into a recession, quickly they'll pump up the printing press and they'll pump out the debt and they'll stimulate, and guess who's going to get some of that money? They're going to need copper. So the demand is strong. It's only going to get stronger, and the supply is super weak. So this is a tremendous buying opportunity. Okay. All right. So when I talk about gold, silver, platinum, palladium, and copper, and all the bullish arguments for them, they are really shaping up that what's happening now is we're having the start of a new metals bull market. And the last one was from 2001 to 2011. And I actually believe that the fundamentals of this bull market that's now just getting started is going to last longer and be more powerful than the 2001 to 2011. So it's a very good time to be a bull on metals. Now, the way that I think is the best way to play it, I'll give you an example. Agnico Eagle. I started picking them in early 2024. At the bottom of 2024, it was trading at $43 per ounce. It's now trading on Friday at $125 per ounce. So that's a 3x move in the price of gold or Agnico Eagle. At the same time, gold has moved up about 65%. Okay. So as you can see, if you focus instead of on gold itself, leave that to the central bankers of the world that need to build up their reserves of gold because it's the best form of money, and the soundest money because nobody's printing debt against it. Like the fiat currencies and the other all over the world are doing. Uh, you would be better off owning something like an Agnico Eagle. And just last week, they came out with their latest quarterly report, and they blew it out of the park on free cash flow. Let me get back. I just got, sorry, I'm going to pull up their website because when I do my comparison to Tesla, I want to be accurate. And I'll just go to their website. And the one that I pay the most attention to is free cash flow. They can play around with earnings per share and earnings before interest, tax, depreciation, and all that other jazz, but they can't play around with free cash flow. That's what goes into the bank. All right. So they had, look at the headline, record free cash flow with another quarter of strong production and cost performance. They've been doing this quarter after quarter as gold has been moving up. They've been making record after record in free cash flow. But I just want to grab that number for you. So their free cash flow. Free cash flow was 1.3 billion. Okay. They say it as 1,305 million. That's 1.3 billion. Okay. 1.3 billion. All right. So then you look at Tesla. They had their quarterly report out about 10 days ago or so. And in that they had record or they had free cash flow of 190 million. Okay. That's a tenth of or 20% of a billion. All right. Uh, Agnico Eagle just reported their quarterly 1.3 billion. All right. Now, for the privilege of 190 million of free cash flow, the valuation of Tesla is 976 billion. Okay, so just a hair's breadth away from 1 trillion valuation. All right, so you get to pay a very high premium for that free cash flow. Whereas with Agnico Eagle, that made all not about 7.5x, 7.5 times the free cash flow. You get to buy that with a $63 billion valuation. Okay? So Tesla and many other companies are trading at significant premiums, and gold mining is a much better, if you only care about free cash flow, Agnico Eagle is a much better business than Tesla. Now, people are going to call me crazy, but I prefaced it, folks. They're not into the electric vehicles that are having struggling as a business, or robo taxis that are going to be a very low margin business, or maybe robots in the future are going to save the company today. Free cash flow today is what I'm talking about as to how to judge a company. 190 million in free cash flow for the second quarter of Tesla, 1.3 billion for the second quarter of 2025 for Agnico Eagle. And yet you pay 10, 10, 15x for the valuation differential between Tesla trading at 976 billion and Agnico Eagle trading at 63 billion. Okay, these are US dollars. So this is part of my argument why I think that Wall Street, tech stocks, the whole market on Wall Street is tremendously overvalued. And the gold business is tremendously undervalued while they're making nothing but money. Free cash flow is off the charts. And if you believe, like me, that the long-term trends are extremely bullish for gold, and the stagflation that's going to become apparent to everybody will be bullish for gold, well, they're just going to keep making more money. And that's why not only do I think you should be owning gold, but I think the best form of owning gold is in something like an Agnico Eagle. And that's my case study on the difference between something like a Tesla on free cash flow and what you pay for it, and Agnico Eagle on free cash flow, which is much superior, and yet you get a much cheaper valuation to buy that free cash flow. All right. Now I'm also going to do a case study on how I value companies, and I use McEwen Inc., sorry, as my case study. For my American audiences, I'll use the US dollar version, okay? So here we've got a beautiful cup, and it's it's slightly lower than the left side. So I think that, this is probably the candle already is forming, and it's not trading very much above its 50-day moving average. But why I think that this is such a tremendous value proposition, I'm going to explain that. Okay. So when I look at a company, a junior gold miner like a McEwen, they produce about 135,000 ounces in 2025. On that kind of production, I do an analysis where I evaluate companies based on 100,000 ounces of production. What do they get in a market value for 100,000 ounces of production? And that can range anywhere from, let's say, about 800 million in market value up to 2 billion or more in market value per 100,000 ounces of production. So I look at the gold mining side of their business, and let's just for ease of running numbers, let's say that they're getting a billion. They're at the low end of that 800 million to 2 billion valuation per 100,000 ounces. So let's say that fair value would be something like a billion per 100,000. So they're going to produce about 135,000. So they should be trading at about a 1.3 billion valuation. But right now they're only trading at a $541 million valuation. So just on the gold side of the business, the company is significantly undervalued based on my criteria and my analysis of comparing to the industry averages, if you will. So when you look at a junior gold miner, what you want to see is that they are able to replace their current production with new deposits. Hopefully, they can increase their production, and hopefully, they can bring their cost of production down. Okay. And that's exactly what McEwen is doing, McEwen Inc. is doing. They currently have broken ground on a new mine called the Stock Mine, which will help them increase production and bring down cost. Plus, they have recently made an important discovery of high-grade gold, exceptionally high-grade gold, folks. The highlight hole from their recent report, their recent news release, was 36 grams of gold over 10 meters. Okay, now to put that in context for my American viewers, that's an ounce of over an ounce of product of gold. So $3,300 of rock value or more based on the current price of gold. But oftentimes in a high grade situation like that, you're usually looking at intersections of, let's say, 1 to 4 meters. To have it over 10 meters is exceptional. Now, if you're an exploration company and you make that discovery of something high grade like that, it's going to take you many years before a mine's built, and then you get to pull that out of the ground. The other part of their news release when they announced that is they also talked about the underground tunneling from their Froome main deposit over to their West Froome deposit. And so that tunneling is very close to that, what we call in the business, that jewelry box of very high grade gold. So they're within months of being able to mine that high grade Froome West deposit, and then Froome was running towards the end of its mine life in 2026, and now it's got a new, no, fresh life left in it. So that is also going to help them increase their production. And if I don't know the average grade of all that they've got in the Froome West, but you start looking at increasing the grade and that increases your margin. Well, now you've got another engine to increase production and bring down costs. All right. So then you look at their like right now they're doing a lot of drilling to the south of the Froome deposit, and they've got about 2.5 million ounces in all categories of the resource at the Gray Fox area just south of Froome. And so that's in the future production that they can replace what they mine. So as a junior gold miner, they're a tremendously exciting value proposition. But it gets better because they've also got a 46% interest in a world-class undeveloped copper mine. Remember earlier I was talking about copper and how we need more copper development projects. Well, as far as copper development projects go, McEwen Copper, which is 46% owned, it's a private company that's 46% owned by McEwen Inc. It is in the top 10 of undeveloped copper mines in the world, and it's in the lowest cost quartile. Okay. So here you've got a very big deposit that can be mined for decades. And it's right now going through a feasibility study. So when you're looking at copper project or any project for that matter, they kind of have re-rating periods when they're in development. One is when they start out at a resource calculation. That's sort of your lowest valuation. Then they do a preliminary economic assessment or pre-feasibility study, and that gets you a new valuation for the copper in the ground. Then you do a bankable feasibility study. This is your highest confidence level of what they have in the ground and the economics of mining that. Okay. And so this gets you a new re-rating, and they could have it out any day now. They talked about the early in the third quarter, so we're into the third quarter now, and so at any point now they could come out with their feasibility study, which will help the re-rating of the copper asset that they have, Los Azules. And they're also looking towards a public listing of McEwen Copper. So, say, for example, you're an investor in the United States and you want to own a copper asset, one that has a good future where you can make great gains on your investment. Well, there are not very many copper development companies listed in the United States. And so I'm very excited about the prospect of them taking the company public, and that's in the near term. Okay, and another reason that I'm so bullish on that prospect is because 46% of the company McEwen Copper is owned by McEwen Inc. Another, I think it's about 17% is owned by Stellantis, one of the world's largest car makers. They need a lot of copper and they want to have a source of that. Rio Tinto has a venture called Newton that owns about, I think, around 14 or 15% of McEwen Inc. And Rob McEwen also owns over 10%. So in those entities, they own 98% of McEwen Inc. So when you go public, those are tightly held shares. And so the McEwen Copper public company will come out of the box with a very tight share structure. And there is a big audience out there for copper for investors in generalists in the United States and in generalist institutions and retail that would want to use this as a vehicle to get exposure to copper. So if I only looked at them as a junior gold miner, I think that they're significantly undervalued. You can do the numbers. I gave them to you. You can figure out how much undervalued I think they are. But that gives a zero valuation for the copper asset. And it's worth a lot of money. The copper asset, when you're in the top 10 of undeveloped copper mines in the world, when the world needs more copper mines, that's a very attractive asset. So, this is why McEwen Copper is one of my favorite picks. I just think it's being underappreciated for its gold mining and and for its copper development project. So, and I recently did an interview with Rob McEwen, so go and check that out. All right. So now I'm going to get into my picks, and I'm going to try and be not do case studies on every one of them because it would take me this video would be 5 hours long, and I don't want that to happen. All right, but I will put the times that I talk about each company in the note or description below this YouTube video. All righty. So I already talked about Agnico Eagle. I have one other major gold miner as a pick since early April. So I picked it because I saw that it was going to have a golden cross. And since then, it had the golden cross maybe 2 weeks after I picked it. And I picked it, let's say, at about $45. You can go on my Substack and find out the precise, but it was somewhere around $45, now trading at $62. So it's made a nice move. And after they came out with their quarterly report, I did one last weekend, I believe. Yes, last weekend, I did the same comparison case study between Tesla and Newmont. And again, it's a tremendously compelling argument that you should own gold stocks over gold and gold major gold miners over something like Tesla. And since I picked it, it had a very brief trading underneath the 50-day moving average. It's been well above the 50-day moving average for the whole time. It's still well above since it had its really great quarter where they had record free cash flow. I like the trajectory of the 50-day moving average. I think the 200-day moving average is going to get even more bullish. And so, yeah, I'm a big fan of Newmont. I think that they've done really good stuff on the fundamentals of the company. And, you really have to look beyond the headlines because some people said, well, they're producing less gold. Okay, yeah, that's true. But they're making more money than they ever have. And the reason that they're producing less gold and I really, it comes down to free cash flow for me. If they're making more free cash flow by producing less gold, good on them. Okay. But the reason that they're producing less gold is they sold off all of their tier two non-core gold mines and made a ton of money off of that. And one of the rationales for doing that was they wanted to laser focus on optimizing their tier one gold mines. Okay. And they also, in the last year and a half or so, they bought out Newcrest, which was a very large gold mining company. And so it takes time before you get a couple quarters of that the synergies working their way into the the company that took over the other company. So it takes a couple of quarters of after integration for the analysts to start saying, "Oh, well, yeah, that was a good acquisition." So the fact that their gold production has come down while they are focusing, getting rid of their tier two assets, and focusing on optimizing their tier one assets, they're actually making records in free cash flow. These are all the reasons that I am so bullish on Newmont, and it's one of only two major gold miners that I have as picks. Alrighty. Now, another company that had their quarterly report out was Agnico Eagle, or sorry, Alamos Gold. There's the New York Stock Exchange listing. So I picked Alamos at the same time that I picked back in the first quarter, early 2024, when they were trading down around $11 a share. They closed Friday at 24.87. So they have also significantly outperformed the price of gold. They are a very efficient miner. They have low costs. The average cost of producing gold amongst the larger gold miners is about $1,550 per ounce. So the average gold miner is making tons of money. They're getting it out of the ground at 1550 and they're selling it for 33 as of Friday or more, upwards of 3,300 per ounce. Now, Agnico Eagle is also going through a building phase where they're building up their new mines, and that will help them increase their production and decrease their cost. So not only do they currently mine gold for less than the average cost of their peers, they're about to bring in these new mines their cost of production down closer to $1,000 an ounce. Okay, which makes them what I call this gold bull market's version of Gold Corp. Now, in the last gold bull market, Gold Corp was one of the best performers amongst the gold miners because they were a low cost producer and they made tons of free cash flow. And that's what Agnico Eagle is doing with the construction of their new mines that they're building, which will increase their production, almost doubling it, and decrease their production by about 30%. This is the Gold Corp of today in this gold bull market, and I am a very bullish on Agnico Eagle or Alamos Gold. I think it is a core holding for an investor that wants to be exposed to gold with less risk and outperform the price of gold. So as you can see, it significantly did that from the lows of 2024. It was, let's say, $11.36 a share. And as of Friday, it closed at 24.87. So there you go. That has significant, while gold has increased by about 65%, it has increased by, what is that, a 1.5x? So tripling pretty or doubling the performance of gold. That's why you want to own, if you're bullish on gold, why you want to own the gold stocks over the gold itself. And again, I think the central bankers will look after the gold. You can own some gold. There's nothing wrong with owning some gold, but if you want to really juice up your performance, companies like an Alamos, companies like a Newmont, companies like Agnico Eagle give you that exposure with less risk. Okay. Alrighty. Now, my other uh, mid tier, I only have two majors and two mid tiers, and Orla. Okay. Orla has been a great pick. I started picking them even before they put their Camino Rojo project in production, back when it was trading at about $1, $2 a share. And it closed Friday at 13.12. It had a sideways action for a few years there. Now, of course, it was significantly above where I originally picked it, but it spent a few years, a couple, 2.5 years going kind of sideways. And then since the lows of 2024, it has been on a very strong run from the low of 2020, late 2023 was $3 and 50-ish cents. And as I said, it closed at 13.12. So it's a smaller producer than a Agnico Eagle by several by a long shot, but they've got low cost production and they make a lot of money. And another thing that helped them out was earlier when I talked about Newmont selling its tier two mines, Orla was one of the buyers of that so what is a tier two asset for a Newmont is a tier one asset for a mid tier. Okay. So this has helped them to have very strong performance. Since the lows, well, since even just before they bought out Musselwhite, the mine from Newmont, it's been doing very well. And they are doing the work to increase their production. It's a common theme, folks. I like these companies when they can increase their production, replace what they mine, and bring down their costs. And they're already a low cost producer. So, this is a very good gold miner, mid-tier gold miner that can grow to be a much larger mid-tier gold miner. And that's why I like Orla. All right. Now, I've talked about a lot of big gold miners. Now I'm going to talk about a very small gold miner, a junior gold miner that's just in the infancy of becoming a miner. Okay. They are their Borealis mine that they bought when gold stocks and gold assets were out of favor about 2.5 years ago for a very cheap price. But one of the beauties of that is that it had a stockpile of material that had never been produced because when it was in production, gold was a lot lower than it is today. And so what the previous operators weren't excited about processing, a company like a junior like Borealis is. So they brought in a contract miner. They're crushing that material, putting it onto the leach pad. That what's left over from the leaching then goes through their ADR plant, which is fully functional, fully permitted, running, and then they produce gold doré right on the property. All right. Now it's going to be small production, let's say 500 ounces per month while they're processing that stockpile. But that will give them good profits, and then they're looking towards and by the way, they're expecting to have a gold pour very soon from that processing of the stockpile. So then what they're doing is they also have permitted pits on the property as well. And so they're doing the amendments to those permits, and so they can increase the size of those pits. That's easy production because the pits are already there and you're just expanding those pits. It's not like you're starting out at the start. And so then they'll take that material, they'll put it onto the stockpile, they'll crush it, they'll put it through the leaching and their ADR plant, and that will be a significant leap forward in their production. Now, beyond that, which will take them into 2026, They're also looking for new pits that they can mine oxide gold off of. So that's, let's say, 2027 and beyond is going to look after that. So as you can see, they're kind of starting out walking, and before long they're going to be jogging, and before long they're going to be running. Okay. And so this is of course, it's a much riskier company than something like a Agnico Eagle or Alamos or Newmont or Orla. But this is the kind of company that I think is going to grow into being a, um, uh, a mid-tier and beyond from there. Okay. So that's the Borealis mining story. Their stock symbol's BOGO. They're a sponsor of my reports, and I'm also a shareholder of the company. So I wanted to make you aware of those biases. Do your homework. I think you'll like what you see. There's plenty of information out there for you to do that homework. But so that's the story on Borealis mining. Okay, now the other junior gold miner, now Sierra Madre is much bigger than uh, Sierra Madre is a much bigger junior gold miner than Borealis. And they've got a great project portfolio to increase their production. And as you can see, since their April lows, they've been on a very strong move. And what recently brought them to my attention and made me want to make them an official pick was the profile of what they're doing to increase their production and the exploration work that they're doing to replace their production with new deposits. And I'm really impressed with what I see coming from their gold and silver mining operations. And I think that that's going to grow them into a much bigger junior gold miner and a very profitable junior gold miner that is emerging from a small junior gold miner into a bigger junior gold miner and then a mid-tier at an ideal time. There really couldn't be a better time than this. So whereas Sierra Madre is not a well-known company, especially amongst generalist investors that are starting to look at gold miners at the top of the food chain and then down, I think it is going to be better known in the coming months because they're increasing their production and bringing their costs down at a time when gold and silver are very bullish. You can go back to my start of this report to and understand why I think that's going to happen. But yeah, I'm very bullish on the growth profile and cost controls of Sierra Madre producing gold and silver. Alrighty. Okay, now I'm going to move down. So I started at the top of the food chain with the major gold miners, and then I moved my way down to the mid tiers and my junior gold miners. And now I'm going to talk about developers. Okay. And why I am so bullish on developers in general is that there's as these major gold miners are making nothing but money and building up their cash hoard, paying down their debt, they've got pristine balance sheets, okay? And they're when you produce gold every day, you also need to replace that gold every or do what will replace that gold for the long term. And so where they look for that is they do some exploration on their own mines, and but that has sort of limits to it. You really need to be out there looking at acquisitions for those companies. And so their balance sheets are pristine, and are they've there has been a significant amount of mergers and acquisitions in the gold and silver space. And now they have to start to look at, well, that cupboard is pretty bare. So now they got to start looking at companies down the food chain even further. And that is your developers, because they have the projects that will be new mines in the near term or midterm. Okay. And so one of those one of those developers is Amex uh, Exploration. And they are a sponsor of my reports as well. And so I want you to know about that bias. What makes them exciting is that they've got a high grade gold discovery development project in Quebec. And they're the key asset, the key deposit in their overall resources is what's called the Champagne Zone. Okay. Now, at the Champagne Zone, they've got about 900,000 ounces in resources, or in measured and indicated resources, and with an average grade of 16.2 grams per ton of gold. That is very unheard of these days, any days. You know, throughout my 32 years in the business, you don't usually see very often 16.2 grams average grade. Now, they also have inferred because they need to do more drilling on the inferred to bring it up into the measured and indicated category. But they've got another couple 100,000 ounces in the inferred category with a 10-gram average grade. Now, when they converted their resources in the measured and indicated at Champagne, not only did it grow, but they also had the grade increase quite dramatically. So I'm optimistic that when they convert the inferred couple 100,000 ounces at the Champagne zone, that it could also have a significant boost in the average grade. Now, when you're doing resources, you don't sort of drill off when you've got an underground mine and it goes from basically surface all the way to about 1,200 meters. When you get down below, let's say 700 meters, 800 meters, you don't drill that off until you're underground, because the cost of drilling those holes from surface gets pretty expensive when you're trying to hit something that's 800 to 1,200 or more meters below the surface. So that's still open to increase the size as well. And then they own other deposits in on their Perron project. So the overall resource is about over 2 million ounces of gold. So it's a great project. And if you look at the preliminary economic assessment on the overall resource, it has very good numbers in it. But what they're working on in one of their upcoming catalysts is they're doing a preliminary economic assessment to bring the Champagne zone into production in a toll milling scenario. So what that means is that they mine the rock, and then they take it to a nearby mill to then get the gold out of the rock. All right. And the plan is to use that milling to then, because it's such a high grade deposit, they would make a lot of money off of that. And then they would use that to build a mill after a couple years of that kind of production. I don't know the exact numbers because they have to put that preliminary economic assessment out. So I'm just throwing some ballpark numbers at you. But so they would use that milling production to then be able to build their own mill on the Perron project in close proximity to the Champagne zone. When and because it's already got, years worth of production there in the original preliminary economic assessment, and it's still open, there's a lot of room to make that a much longer life gold mine. And so they have a great project. It's in one of the best mining jurisdictions in the world, Quebec. And they got this plan to bring it into near-term production. But even before they do that, they're also going to do a bulk sampling process. And it will be interesting because company projects go through bulk sampling and then they get the material processed off-site in another mill. And oftentimes it's what you call a swapping dollars for dollars because you have more costs when you're doing it that way. Um, but because the Champagne zone is so high grade, they could actually they have the potential to make a significant amount of money even off the bulk sampling, which is very rare. And the reason that they can do that in here is because this is a uniquely high grade gold mine, a gold deposit that has a very high grade and potential for low costs, which would make it a money-making machine. There aren't very many of those in the pipeline under development, and Amex has one of those. All right. So let's now move on to Arizona Metals. Uh, or sorry, it's not Arizona, it's Arizona. Yes, it is Arizona Metals. Okay, now I picked this company recently after the stock has been punished. And so I'm not off my rocker. I think I do a pretty good job of analysis. And I think that when they came out with their resource estimate, that the market was expecting more in the resource estimate of the metals that they have. And the reason that companies that can happen is because if you're going to do a preliminary economic assessment and test the initial testing of the economics of a project, you have to make sure that you're pretty conservative with that resource estimate because you're going to immediately throw economics around it. And, you don't want to be arm wavy in your resource estimate when you're going to run a preliminary economic assessment. So their resource estimate, it disappointed the market. But I looked beyond the headlines and I saw that, oh, they want to immediately do a preliminary economic assessment. And so I understood that I immediately understood that that means that they did a conservative resource estimate. All right. That has a lot more to grow by additional drilling on it to tighten up the spacing between the drill holes that go into the model of what you get a resource estimate based on, because they were doing this preliminary economic assessment right away. And so I have picked them because I think that they have the market incorrectly interpreted the news and it acted emotionally and it didn't look at the reality of what they're doing and the strategy of what they're doing and why they're doing it. And when that preliminary economic assessment comes out and gets uh, when it's understood, I think it's going to be much better received. Okay. And so that's why I like Arizona metals and why I picked them after they have been hammered since before the uh, resource estimate. And yeah, I like what I see in their resource estimate, and I think their preliminary economic assessment is going to come out with some very good numbers. And so yeah, that's why I like Arizona Metals. Now, another developer that I'm very bullish on is called BlackRock Silver, and they have a let me pull them up. They have a project in Nevada that they have done the resource estimate on. Their updated resource estimate has 100 million uh, silver equivalent ounces in the resource. And that's sort of one of these milestones, if you will, when you're building up an asset, a silver asset. Now it does have a significant amount of gold in it as well, but they report it in as a silver equivalent number. And so when you get up to about 100 million ounces of silver equivalent, that is now you're getting scale. Okay, the scale that can make for a decade or more long producing silver mine. But they've been doing a lot of drilling, and it's got two focuses. One is they're increasing the confidence in their the category of their resource from inferred to measured and indicated, as well as doing exploratory drilling along trend to increase the amount of silver that they have at their project. So these are very good things that they're doing with the drilling. Now, when you look at projects such as this that are in development, they actually have the highest grade of a silver developer in the business worldwide. And so this makes it a very attract. It's got that scale now, and it's got that high grade, and it's right beside the town of Tonopah, which was built 125 or more years ago for the Tonopah District silver mines. Okay. It was second, the big one in is for silver, and why Nevada is called the Silver State. Most people think of it as a gold mining state. It is an important gold mining state, but it started out as a silver mining state. The Comstock lode was what made it a silver mining state. And then not long after Comstock came the Tonopah district. And most of that mining was done in close proximity to the town of Tonopah, but it was still open to the west. And that's the ground that BlackRock has been developing for the last 4 or 5 years. And so they are doing really good fundamental work on their project, and they have a very exciting deposit. It's got that scale now, and it's got this high grade. And they're moving it towards production at when I think by the time they get it into production, that silver will be making new record highs in the price. So they're timing to be doing this, moving it through the development stages and towards production is kind of at a perfect time as gold, as silver and gold are trending upwards and heading towards new record highs in the price of gold. And I don't think it's very long. In fact, I think we'll see it in 2026, where silver starts to make a series of new record highs. So to have an asset like they do in that environment, makes them a very attractive company. And that's why I like them as a silver developer. All right. So Emperor Metals, they're a new pick. Well, I've interviewed them in the past, but recently I made them an official pick, if you will, because of their recent resource estimate. And this one caught the market by surprise. It moved from around 20 cents to almost 35 cents. Now, you go back to early this year and they were trading at about 6 or 7 cents. And so when you get a big run like this and you get the fundamental news, there can be some profit taking, but it's been very mild profit taking. And the dynamics of the project, they've got scale, and what they're going to do differently is because they're in an area that has mills. It's in the Abitibi region, one of Canada's, well, it is Canada's most important region for gold mining. It's one of the most important in the world, actually, the Abitibi region. And there's a lot of mine mills all around them. Okay. So they are looking at the cost benefit analysis and saying, well, why would we take on the capex to build our own mill when we can just ship the ore not very far away and make a lot of money like that without having to incur the big capital cost to build the mill. And so, when you look at the cost benefit analysis, it makes a lot of sense. Now, not every gold deposit has that ability. Sometimes they're in remote locations and they got to build, if they want to mine it, they got to build it on their property. In this case, they don't have to do that because they're close to so many other mills that have excess capacity. So, and they've got a really smart guy who is the CEO of the company. He's a really brilliant guy, and he's one of the pioneers for using artificial intelligence in the mining business when he was helping when he was one of the key geologists on the Detour Lake mine, which is now one of Canada's. If it's not the largest, it's the second largest in all of Canada. So this guy's a mine builder. He knows what he's doing, and he also knows how to use artificial intelligence to increase what they have on their property, which is exactly what they did in this recent resources estimate. And so, yeah, he's really brilliant guy and really well-run junior gold explorer and interesting business model. And I think that puts them in a very unique position. And I really like what I see out of Emperor Metals. All right, now I'm going to switch to mostly I've been talking, I think all I've been talking about is gold and silver, but I am also very bullish on copper and palladium. I talked about that earlier when I was doing my chart look at palladium. And okay, so the next company, this company is developing and they've received all of their permits now to build a very large, mainly copper and palladium mine, but it also has some platinum in it as well. And with platinum and palladium doing so well, and even copper, even after the big run, it's still trading at about $4.50 per pound of copper. And I got into this business in the 1990s when it was trading at 60 cents a pound. So at four and change, even if you think it's going to go sideways, a project like this would be, I think they're going to, the estimates are something like 42 million pounds of copper production and about 100 and let's say 150-ish for the palladium, and then another 30,000 ounces of platinum. And when you look at the economics of it in their feasibility study, they've got very good economics, and they can update that preliminary, or I mean their feasibility study. So now they're getting into the interesting time. They've done all their economic analysis. They've got their permits. It's a shovel-ready project. There's not a lot of copper, palladium. There's not a lot of palladium new production coming online anywhere in the world. So if an investor wants to have exposure to a new mine for palladium, platinum, and they're also bullish on copper, there's a very, very few companies that you can look at, and basically all roads lead to generation mining, if you will. I think that says everything I need to say about generation mining. All righty. Meridian Mining. They've got a very exciting project for gold and copper in Brazil. And it's had a preliminary economic assessment. The numbers look really good in the preliminary economic assessment. They're doing additional drilling and that's why they've had a pretty good move since, let's say, early 2025. And it's actually, it's created one of the most bullish cup and handles. Again, what I look for in the cup and handle is I first start at the left side of the cup, then I look at the shallowness of the cup, and then I look at the right side of the cup. And if the right side of the cup is significant, and this perfectly is a case study, if the right side of the cup is higher than the left side, the candle part won't last very long. In this case, it only lasted for a few weeks and then onwards and upwards from there. And yeah, this is a very good, and it's in a mining friendly part of Brazil. And Brazil is a very is has basically, when I look at a country like Brazil, and I ask myself, well, uh, how mining friendly is it? Well, if I then look and I see that every major mining company, or almost all of them, are mining in that country, that speaks volumes about how mining friendly that country is, and that is the case for Brazil. Almost every major mining company has operations in country, and so then I look at the quality of the project that, in this case, Meridian Mining has. And it's got a very compelling story for high grade open pit gold and copper, and they haven't even touched the depth potential. And this is in what's called a volcanogenic massive sulfide. So it's also called a VMS. And how you can think about that for my non-geologist audience is think a bit about it like it's volcanoes that came up millions of years ago. All right. And where there's one, there's often many. They've only been really focusing on two. And it looks like they've got more of those, and they always come in clusters. So the rationale is has a geological backing, if you will. And so, yeah, that's that. So I think they're going to find more. They're going to start out on a couple of their deposits that they can open pit and make lots of money off of, and then they're going to keep building more deposits to mine in the future and have their organic growth on their property. All right. Now I'm going to move on to Nouveau Minerals. Nouveau Minerals has a 1,300 square kilometer project in the Abitibi region, which is a famous district for gold mines. But this was actually a copper or a base metal mine that was being mined by Glencore until just a couple of years ago. So they got all the permits, they got all the mining infrastructure. It's right near a town. The locals are on side because a lot of miners live in that town, but they have to go long distances in order to work in other mines far away. And they would rather sleep in their own bed and have a mine there. So the locals are very much behind the Matagami getting back into production. And in Quebec, the Matagami and the Brace-Mac McLeod mines are well known as the historical production, well, not that historical, well, just up to a couple of years ago, by a major, which is Glencore. All right. And so it's wide open still for exploration of base metals. But they also knew that this project was good prospects for gold because there's so many great gold mines in the Abitibi. I'm not going to go into a lot of the details about why, because I recently did an interview with their management, and I talked about um, why it's a very good place for gold exploration. But they drilled a hole right beside the underground workings of the Brace-Mac McLeod mine, which was a base metal mine. So they had all these underground workings and they mined it out. Well, not there's still room to increase the and bring that back that part of the project back into production. But they knew that there was a prospect of there being gold not far from that VMS, that that base metal mine. So they drilled a hole about 50 meters from those underground workings and they hit a quartz vein, and the quartz vein is loaded up with visible gold. This is very rare, folks, to have a grassroots discovery with your first hole in a mining friendly jurisdiction that's loaded up with visible gold. I am a shareholder of this company and I'm a happy shareholder because I think that they have an important new discovery of high grade gold in the Abitibi. And if that proves out with the assay results and future drilling, keeps moving it towards being an important discovery, well, it will get a lot of investor attention because everybody that invests in gold stocks, especially in the exploration and developers, they know how important the Abitibi is. And to have a grassroots discovery in the Abitibi, that's a major event for a junior. And so they've got this combination to bring the base metals uh, back into production, but now they've also got the mix of potentially having an important orogenic gold discovery in the Abitibi that's loaded up with visible gold. I don't think I need to say any more about that. Vizsla Silver is a sponsor of my reports, and I'm so happy to have them because I think that they're going to grow this company into being the next major silver producer. Now, why I say that, a lot of why I say that is a recent interview that I did with their head of exploration, Jesus Velador, that you can find on my YouTube or on my Substack. And we talked about what they've drilled to that is in their preliminary economic assessment and additional drilling that they're doing. Now, why I say with confidence that I think this will be the next major silver miner, a highly profitable one, is because if you look at the economics in their preliminary economic assessment, the key metrics that I look for are your cost of building the mine, how quickly you can pay back the cost of building the mine, and what makes that happen rapidly is when you have a high internal rate of return, which is basically your profit margin. Okay. So in their base case, in their preliminary economic assessment, using significantly lower gold and silver numbers, they have a 85% IRR. That on its own, if that's all you had, that would make you in the top echelon of mines being built for mining anything. Okay. It's very rare. Usually the IRR is somewhere between 20 and even in a really great case, 40% IRR. So to have, basically double that, that's fantastic. But they also, if you use prices closer to today's gold and silver prices, now the IRR goes over triple digits, okay, over 100%. And when you use the more current prices, the capital, the capex, to pay back the capex, the cost of building the mine, happens in less than 6 months. That again, you just don't see that in mining. Uh, very often, it's super rare. Okay, it's like a unicorn. And that's in fact what I call. I think that Vizsla Silver is going to grow into a silver mining unicorn because of this how special their project is. But all of those economics are only based on a couple of the veins that they have on their property, and they have over 100 veins on their property, and the potential to find what are called blind veins that don't even come right to the surface. And so they have the ability for organic growth and replacing of deposits on their key project, but then they've also got a project about 20 kilometers to the south that looks very good as well, very highly prospective as well. And they're starting to bring that project along as they're doing regional exploration at the Panuco project, and then they have this other project that they're going to bring along as well. And then they got one to the north. So they've got the assets already today that can make them into a major silver miner. And they have the assets that could keep them that way for many years into the future. And so I advise you to do your homework, and part of that should be going to the interview that I did with Jesus Velador about Vizsla Silver recently, just a few days ago, maybe a week or so ago. And it's a good one for you if you're interested in Vizsla Silver, because as I said, I think that they're going to be the next major silver mining company in the business. Okay, so now I'm going to move on to my gold explorer with an important discovery, which is Goliath Resources. Goliath Resources has what I think is going to prove out to be the next important gold discovery in the prolific Golden Triangle of British Columbia. And as you can see here, if you go back to their 2-year low in 2023, they were trading at 56 cents. They closed on Friday at $2.18. They had a really big move here because they had a spectacular hole. And it's actually it's they've had a lot of spectacular holes on this project that's called the Sherbet Discovery. And what makes it unique to me is that the mountain that their gold deposits are in, if you look at the drilling, and I recently did an interview with their CEO and I show this map that really tells the story to me. You look at how the gold is distributed throughout this mountain. I call it the Golden Mountain. It has visible gold in drill cores for about 1,200 meters from one side to the other, and about 800 meters from the other side. And top to bottom, it's probably distributed over a 500 meters or more, maybe 700 meters of vertical relief as well. And it's got visible gold everywhere, and you just don't see it's very that's a unique a unicorn kind of gold discovery that doesn't come around very often. And when it does, it turns into a gold mine, and a very profitable gold mine. And I think that's exactly what they have. It will be a gold mine of the future. And they've got plenty of catalysts because they're drilling up a storm. They're going to be drilling 60,000 meters in total this 2025 drilling season that will last until it's got about another 8 weeks or so left in it. And yeah, they're going to have tons of news out from that drilling that they're doing. And yeah, I advise you to take a look at Goliath because, as I said, it is my highest conviction gold explorer with an important discovery. And I believe their discovery is a unicorn in the Golden Triangle and in all over the world for what's happening in gold exploration these days. So yeah, take a look at Goliath Resources. Now, this show is running a little long, folks, and I'm getting a little, little bit long in the tooth for this show. I wanted to talk about all of my other gold and silver and copper explorers, but I kind of running out of time. So what I'm going to do is I'm just going to quickly run down the list for you. Canadian Gold Corp is one. Dryden Gold is another. Hercules Metals, that's those two are gold explorers. Hercules Metals is a copper porphyry explorer. They're doing a lot of drilling now, and they should have assay results out soon. Inventus, they're a copper or sorry, a gold conglomerate story. One of the greatest gold mines in the world is a conglomerate gold deposit in Africa, South Africa, and yeah, they got one in Canada, in Ontario, that looks very interesting. Kootenay Silver is a silver explorer with a high-grade discovery. It's got about 50 million ounces in it of silver in it. And I think it could grow into the hundreds of millions of ounces in it. I really like that project a lot. Lots of high grade there. Norsemont Mining is a gold, well, they're more of a gold developer, but they're wide open for exploration as well. They've got about 2.5 million ounces of gold in their resources. It's a permitted mine. It's got an ADR plant on it, so they can process the gold right there from the oxides and produce gold from oxides. It's wide open for oxide exploration. I recently did an interview with their CEO, Mark Levy, and I advise you to take a look at that video because it tells you why I'm so bullish on the company. Power Metallic Mines is looking for a Norilsk base metal, high grade copper mine with a nickel deposits as well, and in Quebec. And they've got a lot of really high grade copper in that system, and I think it's going to prove to be the most if let's just say I think it's going to move into my uh, copper nickel explorers with important discoveries very soon. And they're doing a lot of drilling. So pay attention to that one. Power Metallic, uh, formerly Power Nickel, but their symbol is the same, PNPN, and they trade on the Toronto Stock Exchange Venture Market. Kimbaya Gold is I recently did an interview with their CEO and their head of exploration. Very impressive group of people and project, and they're about to start drilling, and it's right beside Aris Mining, who has had a phenomenal success at their Segovia mine that help them launch their stock up over 300% in the last year and a half or so. And these guys got the ground right beside it, and the same cluster of veins carrying the gold goes right through their property as well. Ramp Metals is a gold explorer, high grade gold discover. They got one hole into a high grade gold discovery until their recent drilling, where they drilled another 7 holes, I think it is, into that discovery. The stock went up a lot on the drilling, and then it's been drifting down since. And so I think investors are worried that they don't have great results in the current drilling. And that may be the case, but it's so early in that discovery that it doesn't really concern me what happens in the short term. I want to know more about that discovery. So I'm watching not only for the assay results, but I'm watching for what they see in the drilling as far as what's important to making a discovery turn into an important discovery. And yeah, that's why I'm watching that one. Argenta Silver, high grade silver explorer and developer in Argentina. It's backed by Frank Giustra, one of the big success stories from the billionaires. I don't know if he officially agrees with that or not, but he's called the billionaire. He's very wealthy from his endeavors in the gold mining, in the mining space. And they've got a very high grade silver project in Argentina. They're doing a big financing right now to keep that drilling going, but it's quite a breathtaking project. And I love high grade silver exploration and discovery, and it's a really interesting project. Almadex, they're looking for a copper porphyry, copper gold, possibly in Nevada, and run by a very talented father and son team of geologists that have done this before. They've made important discoveries. They've had those discoveries bought out and turned into mines by bigger companies. And they're doing the initial exploration drilling on a target that they're very optimistic about. And I like its potential. If they're successful, it will have multiples of their current valuation because they're such a talented team and have the respect of so many people in the mining business. So Almadex, that's Almadex, is their how you say their name, and you'll have to do a Google search for their symbol. Luca Mining, Luca Mining, they're a junior miner of base metals and precious metals in Mexico. They've got some base metal mines and some gold and silver mines. And they have really turned the corner. When their new CEO took over, the company had about 30-ish million dollars in debt. They've turned around their operations, making them very profitable, and they've actually been able in a very short time take that 30 some million dollars of debt down to about 8 million. And that reflects the quality of their mines, okay? And they're doing more work to increase their production, bring down their cost, replace their old mines with new mines. I like their whole story from top to bottom. And as they get debt free and they start building up cash, I think more investors will pay attention to Luca Mining. North Isle Copper and Gold has, as it says, copper and gold. It's in British Columbia, Canada, on Vancouver Island at the north end of Vancouver Island. Um, they've got a very good group of deposits on their project. Uh, it's got scale, it's got the right kind of numbers in what they have. I think they've got a mine of the future, and they've got other pro targets on their project that they will use the money they make off of their initial mining to expand and look for organic growth on their property. They've got a very large land package, a very talented team running the company. I like that they are very aggressive in their digital marketing efforts to tell their story and get it well known. Yeah, I like the prospects of North Isle Copper and Gold. And that you spell that North, North, Isle, Isle, Copper and Gold to look them up. And the final company is Rackla Metals. Rackla is looking for a discovery that has made Snowline Gold a very big success story in the Yukon. Not long ago, it was a couple of dollars a share. Now it's trading close to 10, over $9 a share. And they have found probably well over, I think their initial resource estimate was about 7 million ounces of gold and very low cost production. Now, these guys are looking for something just like that. Okay. I don't want to go into all the technical details, but it looks like they've got one hole that is starting to look like what Snowline started out at. They got a couple that are kind of iffy to me. They got one that I think could be quite important. We won't know until we see how much gold is in the veins that they've found, but they found a high density of veins. They're small veins, which is exactly what Snowline Gold has, but they're small veins that are compacted into a series in every meter. They get a series of these small veins veinlets, if you will. And if you have a high density of them over 100, 200 meters, well, that's what makes for a 7 million ounce deposit. Now, these guys they're just like a handful of holes into this, what looks like they could be having an important discovery. And who knows what those early holes will, because in the early holes, you're really learning about what you have underground. Now they've got a lot of optimism based upon what they see above ground, but ultimately the deposit is in the ground. And so you got to drill into that to figure it out. And yeah, I mean, it takes holes to do that. And they're doing a bunch this year. And I'm keeping my fingers crossed for this pick. As you can see, as they've ramped up and got into their drill season, the stock has been doing very well. So we'll keep a close eye on how this one emerges. Hopefully, it emerges as being an important gold discovery. And if it does, it's run by somebody who has done this before, has a very good reputation in the mining business. He surrounds himself with very talented people. They're doing really top-notch work. And yeah, we'll see how it goes in the not too distant future. On that note, that's my show for today. I want you to enjoy the rest of your day or evening, wherever you are in the world. Bear in mind, my shows are for information purposes only. I'm not making buying or selling recommendations. It's important for you to do your homework, speak with your financial advisors before making any investment decisions. I am merely an idea generator who uses my 32 years of experience in the mining business to help bring good stories to my audience. But ultimately, whether you buy or sell a stock, that's up to you, your financial advisors, and your homework. And I really stress the homework because I think it's important for investors, no matter what industry they're investing in, to really know the companies that they're investing in, because the more informed you are about the sector you're investing in and into the company you're investing in, you'll make more sound investment decisions. You won't be make emotional investment decisions. And emotional investment decisions are a recipe for disaster in investing in any sector. So do that homework. Have a great day, and we will talk to you soon.